Hello, guys. Good afternoon, good morning, good evening from wherever you're watching this in any part of the world. My name is Daramola and I talk finance like you have it. Mike talk finance, business, and investment FBI way. And we've been on a series on why you must understand business and let me drop this phone. Why you must understand business numbers. We looked at it from the perspective of as an individual, personal finance, business owner, or an investor, you must understand this. And there are several good reasons why you must understand these basic numbers. It shows how financial, not in terms of being stingy or don't say frugal, but in terms of your management skills of your money that is coming into your pocket, accountability, integrity. If you're a business owner, you want investors to invest in your business. Your ability for you to present sound financial statement of your business performance is very key. So you must present good financial information that can motivate, that can seduce the investor into investing in your business. Okay. As an investor, you want to invest in asset business, not a business that is a liability, because you can be investing and you're thinking you're investing in an asset, but that thing you're actually investing in is a liability. It's actually draining money from you. And you wouldn't want to be in that kind of situation. It's just like I would have used my money to buy something else, and I know that I bought it with this, but I invested in this business and the business wiped away my money. You want to find yourself in that kind of situation. So it's very important that we understand business information, business number. So last week we talked about income statement, and this week, no, not last week, last 2 weeks, we analyze income statement using layman understanding. So anybody can understand it. You should go and watch that video. It's gonna help you. You see, finance may be boring, but if this is your field, then it's passionate. It's something you're passionate about, like myself. It's something you enjoy and love doing. You understand? But if this is not what you're passionate about, you also want to get your finances right. You also want to get your financial well-being right while you're concentrating on doing other important things. So it shouldn't take you more than 30 minutes, 1 hour, 2 hours, in a week or in a month to get sorted on some important financial investment decision. And this is why this video is here to help you so you can be able to read business numbers quickly to make investment decision. So today we want to be talking about balance sheet. And without further ado, we'll just go deep to what we have for today. Okay. So there are some important information that is in a balance sheet. So in a balance sheet, we have four categories of information there. My pen, come up. Okay, we have four categories of information in the balance sheet. Four important categories of information. The first is um, the current assets. Then we have current um, liability. Let me put it this way: we have current asset and we have current liability. I don't like the pen is coming out. Okay, so current asset and current liability. We also have long-term assets and long-term liability. So this is it: current assets and long-term assets, current liability and long-term liability. So the difference between the long term and the short term is a 90-day period. So lesser than 90 days is short term. Lesser than 90 days is short term. Where's my pen? Okay, so lesser than 90 days is actually short term, and greater than 90 days period is long term. Okay, so whenever you see this information, just want you to have this picture in your mind that this is what it means: short term and long term. So in it we have Cash and cash equivalent, account receivable, bad debts, long-term asset, inventories, property, plant and equipment, goodwill, account payable, unearned revenue. These are the important information I really want us to know. Very, very important. The rest, we can just try to summarize it. We'll look at, we'll go into practical, we'll analyze Microsoft balance sheet after the explanation of this. So I'm going to make it in such a way that anybody can understand it. Like you can understand this by listening to me. So I'll try my best to make it very possible. So if you see me looking at my right hand side, your left, I'm looking at my screen. I have a bigger screen. My webcam is facing me, but my bigger screen is on the right hand side, which is your left. Okay, please just bear with me if you see my face actually facing that direction. So account statement, but this time balance sheet. First, in the current asset, we want to look at cash and cash equivalent. Cash can be the money you have in the bank. Everybody, not everybody really, but a lot of people will have money in the bank. So that's a form of a current asset that you have personally. So you can see that this affects personal finance, corporate finance, and also as an investor. Okay, so that's what you have in the bank. Then we have cash equivalents. There is a possibility that you can have an emergency situation that will require you to have money immediately. So we have people that have investment in shares of company, cryptocurrencies. They can easily convert that money to cash and they are paid next day, second day, third day, whatever. So cash equivalent are those assets, those current assets that can be easily converted to cash within the next 90 days. That's cash equivalent. So we have account receivable. For instance, now I sold this phone to somebody, to a friend, and the friend promised to pay me within the next 60 days. This is account receivable. I sold the phone, it is recorded that it has been sold, but the cash has not come into the bank account. So we have this as account receivable of whatever you sold. Is it £300, £400? You have it. By the way, this video, I'm recording this video the second time. The first one I made, I didn't know my YouTube. I was watching something on YouTube. I was watching a presentation on YouTube, and I never knew it was still playing. So I was speaking, and that was also speaking. So this is the second time. Okay, but I know I love what I'm doing, so let's just continue on it. Account receivable, that's what it means. So bad debts. Oh, it's also very possible that my friend that I sold this phone for £300 can come tomorrow and said, Daramola, I don't have £300 to give you. Please, can you just take 250? So it means I have £50 that is a bad debt. That's what it means. Bad debts. So we've talked about cash, cash equivalent, account receivable, bad debt. So long-term asset, inventories. So for instance, I manufacture cell phone in China. So I have 5,000 of this phone, this Samsung phone, 5,000 of it in my warehouse. Those are called inventories. They are yet to be sold out, but it's a form of asset because if I sell them, that is money for the company. So that's a form of inventory, a form of long-term asset. So as long as they are there for over 90 days before they are sold out, that's a form of long-term asset. We also have property, plant, and equipment. It's an asset because businesses owns multi-billion real estate investments. They own offices across the world. They own machineries, cars. They own office equipment, machines, and all of that. They are also a form of asset, but these are long-term asset. If you want to sell them, it takes time for you to sell them, and it can be more than 90 days. So that's why it's called a long-term asset. And another point is goodwill. So goodwill is an important concept. For instance, this phone is supposed to be sold for £300. but I bought the phone for 350 or 400 pounds. And the reason why I bought this phone for 400 pounds, it's because of the brand value of this phone, the the capacity, what people knew about this phone. So it's I'm not just buying a phone, I'm buying a valuable phone. So if I have this phone in my pocket, or if I bring this phone out, or if I'm operating this phone, people are like, wow, this phone is wonderful, this phone is nice. So that £50 or that £100 difference from what the market value this phone as is the goodwill. So that can be a form of a long-term asset that is recorded in the balance sheet. Okay, that's what it means. So it's the difference between what you bought, the phone or the business, and what is actually worth. So this is what I means now by what is actually worth. A business have assets and it has liability. So when you subtract assets from liability, what you have is X amount of pounds, for instance. Now, if you bought this business greater than the XX amount of whatever is remaining from the asset minus liability, that excess amount is called the goodwill. Okay, that excess amount is what is called the goodwill. So we have account payable. The way it happens that suppliers supply products to you or raw materials to you, it's also very possible that I'm sorry, you supply to customers and they are yet to pay you. The phone example I talk about, it's also very possible that my friend can also supply phones to me and I'm yet to pay him. So that scenario is called account payable. I have £300 to give to my friend for the phone he supplied to my company to make phone calls, for instance, like that. It can also be related to personal finance, for instance. Yes, because sometimes we take phones from phone suppliers and we are paying in pounds. Let's say we are paying £5 monthly or £20 monthly, and you have that amount for the next 1 or 2 years. So that's account payable, for instance. So you should have that figure in mind. I have 25 or 30 or 40 or £50 account payable. Okay, so you have that in your head. So for instance, you have laptop, um, you have for instance, you have insurance to pay, you have phones, and you have bicycle, you have car, and all those stuff that are paying there. So that's account payable. Okay. So unearned revenue or prepayments for companies like Microsoft that have software as business. This is what I mean. Netflix, for instance, I believe you understand Netflix. Netflix offer TV or movie subscription, so you can subscribe for 1 year, 2 year, 3 years, as much as you want to do that, as you are able to do. You have that subscription. So you've paid for 2022, for instance. You've paid for 2022 for your kids to watch the wonderful movies, and if you don't have a kid, for yourself, for instance. But we are not yet in 2022, but you've paid for it already. So it means that this is a revenue, but the service has not been delivered for 2022. Anything can happen. You can come up whatever and say, I'm not interested. So Netflix has to pay your money, but there may be some form of charging or fees for that, but this is what we mean by unearned revenue. Till the service is rendered, it remains an unearned revenue. And that is just what we need to know about the balance sheet. For now, it's the basic thing you just need to know about balance sheet. And with this, we are going to go into um, a practical view of a financial statement of Microsoft. So this is the balance sheet of Microsoft for 2020. Um, for 2020, this is the balance sheet. Okay, so I'll try to use my pen so I can be practical as much as possible. So we have assets, we have liability. Remember, current asset, long-term asset, current liability, long-term liability. This is it here. And if you can see my screen, this is it here also. Okay. Right. So let's now break it down. So cash and cash equivalent, this is the figure for cash and cash equivalents. We also have short-term investment is a form of that also, but it's a form of short-term investment. It could be maybe they lease out a property and it's going to be returned in the next 90 days. It could be there's excess cash in the bank and they decide to give overnight lending to the banks. There's a particular percentage that they get. So instead of this money lying down fallow, it's actually given to the bank and they paid something for it at the end of the investment period, which has to be less than 90 days, obviously. 90 days. Okay, so let me wipe my screen. So the next point is the combination of the total, the cash equivalent, and short-term investment gives us what we have here. You can see that is an improvement from last year. You can see there's an improvement in these figures, despite the fact it was COVID-19 period. So Microsoft did phenomenally well with that numbers. Okay, account receivable, we've talked about that, inventories and other current assets. Okay, this is the figures here. So whatever you add, this XX amount, if you add it to this figure here, it will give you what we have here. Okay, so that's simple. We have property, plant and equipment, 44,151 billion US dollars. Operating lease rights of use of assets, for instance. So let's say Microsoft have data centers in the UK, in South America, in North America, and these data centers are not necessarily owned by Microsoft. It could be a real estate firm that own them, but Microsoft have lease rights to use those properties. So it's operation lease rights like that. Then we have equity investment. They can have investment in other companies. Microsoft can have a major share in other software companies, for instance. So that is equity share. But now this is long-term asset. Here was for short-term, but this is from here is a long-term asset. We also have goodwill. If talk about goodwill, for instance, businesses they bought. These are the excess values of those businesses. We also have intangible assets. There also can be forms of some intangible assets, long-term assets, other long-term assets from real estate investment, and all of it can also serve as other long-term assets. So when you add these figures together, what you have is this, for instance. When you add the figure together, what you have is this. So when you add this, I mean this figure with this figure, this is what I mean. When you add this figure and this figure, remember this figure is the combination of this. Okay, so it's going to give you total asset. So let me back my screen to make it clearer. Okay, so liabilities now, current liabilities and long-term liabilities. So the same thing applies to it. So if you add account payable, current portion of long-term debt that ought to be paid this year. So long-term debt becomes short-term debt. This is what I mean. Debt that is supposed to be paid in 2020, when we come into 2020, it becomes a short-term debt. For now, it's a long-term debt, but we come into 2020, that long-term debt becomes a short-term debt. So there's a portion of long-term debt that we have to pay in 2021. When we get to 2022, there's a portion of long-term debt that we have to pay in 2022. There's a percentage of it that we have to pay. So this is what we mean by a short portion or a portion of long-term debt that we have to pay. Long-term, so where are we now? Okay, a current portion of long-term debt, this is where we are. So we accrued compensation, okay, in terms of the staff. They say we promise bonus to our CEOs, our board of directors, top management staff, that if we can hit this percentage of sales, this is the compensation that we have to pay. So Microsoft have this accrued compensation of in billions, 7.874 billions. That's wonderful. That's quite a huge amount of money. That's for that. Okay, short-term income taxes. Yes, business pay taxes. Depends on the state or the country you are in, but every business pay taxes as long as it's a registered business and is actually in a country where tax has to be paid. Short-term unearned revenue. We talk about unearned revenue. Services that has been sorry for that. Services that have been payment has been made, but the services have not been rendered. So short-term unearned revenue. We also have other current liabilities can also be there. You can Google these things out. Also, I'm sure it's right on Google. You can Google them out. So total current liability is the combination of all these figures. It's going to give you the total current liability. So long-term debt. This is what I mean by long-term debt now. I mean more than 90 days. Long-term income taxes for tax, long-term unearned revenue for more than 90 days. Services that has not yet been rendered. Then we talk about deferred income taxes, tax that we ought to pay but we have been deferring them. Then we have operating lease liability. Operating lease liability. For instance, I have a lease for 5 years that I've not yet paid. So that's an operating lease liability. I have to pay to my landlord or to the leasehold owner. Other long-term liabilities also can be there. So if you add this figure together, what it gives you is this. So this is the total liability. Okay. So if you add this figure together, I mean this, it gives you X amount of money. So when you add this to this X amount, it gives you this figure we have here. Okay. Then commitment to contingency, stock equity. Publicly traded companies are owned by shareholders. So we want to see the value of what shareholders have in Microsoft. That's exactly what we want to see. Let me clean this screen. Okay. Yeah, it's actually cleared now. It's clearer now for every one of us to see. So stockholders' equity, common stock paid in capital. So this is what it means. In the period of 2020, apart from the goods and services transaction that Microsoft did for 2020, they also sold shares. They also sold their shares. So this is the value of what they sold. 80 billion of these shares was actually sold. So this is what they made from the sale of their shares. So for instance, let's say Microsoft shares was 150, now it's 170 for instance. So the combination of the share price and also the increased value of the share price that was sold in the open market, it could be in the stock market, it could be in the secondary market, but this common stock or preferred stock that was sold in the period of 1 year, which is 2020. That's the figure there. We have retained earnings. So if you know what's the previous video, please, I want you to go and watch it. It's a continuation. This video is a continuation of last 2 weeks video. And if this video has been helpful to you so far, please like, share, and subscribe. If there's anything you don't understand, please, you can also comment, and I'll respond as fast as possible. Remember to subscribe. We are going to get to 100 million. Trust me. This is going to be a verified account. Yeah, trust me. But for now, we want to hit 100. So please subscribe, like, and if you want to unlike, you can also unlike. But it helps the algorithm altogether. But just give your comments so I can be able to improve better, so we can become excellent. So retain earnings. So we have a business can make net profit or net loss. You can also make net profit or net loss. So if you make net profit, a portion of it you decide to pay your investors, which is the shareholder. Let's say you want to pay them 15% of the net income. 15% of the net income. Let's say it is $11 billion. So you want to pay them 15%, whatever that figure is when you pay that figure out, the balance is called retained earnings. So the balance can be 77.5 billion. So that can be retained earnings. So that retained earnings is used for further investment, is used to pay other form of long-term debt, short-term debt you have. Okay, and retained earnings is a combination of since when Microsoft have actually been a public company, so we're piling them up. So the value as of 2020 is 34 billion. That's the value as of 2020, 34 billion. Accumulated and other comprehensive income in terms of, let's assume, not assumption, other comprehensive income can be, um, we bought a business or we have a stake in the business. We bought it for, let's say we bought it for $2 billion, for instance. Now that business or that share is now worth about $2.2 billion. So we've made a profit of about 200 million. So that's actually what is going to be recorded here. 200 million. And it can be lost that the business is now worth 1.8. So it's going to be loss in comma, is going to be loss. There's going to be this form of bracket if it's actually a loss to show that this investment has actually depreciated and not appreciated. Okay, so the combination of current assets minus current liability, sorry, total assets rather, total assets less total liability. Let me clean this, sorry. So it's kind of better and more excellent. Okay, so total assets you subtract total liability from it. Whatever you have, x, you now plus the total shareholder equity, which is this. What you have is a total, the total liability and total stockholders equity. So when you have it, when you add it together, this is the figure that is actually going to give you. I just want to make the video very short. This is why I didn't bring out my calculator. But if you have any question, if you don't understand anything, please don't hesitate to ask me, and I'm going to respond as quick as possible. So I'm very open. If you're interested in investing, you can just let me know. If you're interested in consulting in terms of personal finance, trying to understand some things about personal finance, just let me know. That's part of the service we run. Okay, this is free, but for that, it's going to be different. Okay, so I can sit you down or walk you through some important things in terms of planning your finance, investment decisions, and all of it. So please don't hesitate to like, share, and comments. I'm Damola. Thanks for listening and see you next week. Bye for now, guys. Cheers.